Welcome back. Well, this week, worldwide manufacturing and services PMIs take center stage, with investors looking forward to U.S. monthly employment reports as well as central bank rate decisions. Zaye Capital Markets' Chief Investment Officer Naeem Aslam joins us for a preview of the economic week ahead. Thank you so much for your time, Naeem. Now we're almost in the second half of the year and the markets have returned to their highs pre-Liberation Day. Have markets turned toward the sun as we enter the month of June?
Thanks for having me. I like the way how you put it. Yeah, no, unfortunately not. There are many cloudy spots out there, and unfortunately, I think the outlook still looks very grey, just like how the weather in London is. So the reason for that is because, number one, we have no clarity, because for the last number of few days, what we've been listening is that, okay, one party blaming the other party, i.e. US and China, blaming each other, that the both of these particular parties walking back from the agreement, from the conversations that they've had in relation to trade conversations, the trade tariff deals that they have. But now there is some silver lining to this one, because earlier today we now are listening to these particular rumors, and traders are very much paying attention to that one, that there would be a potential meeting between President Trump and President Xi. So that is certainly, brings that sunny side up for the stocks, the one that you really refer to. But even, being very optimistic, I don't think the temperature is really going to get as high as it would in Desert Sahara for some of these particular stocks. And that means that we do not really anticipate the prices to skyrocket, because this is going to be a bumpy ride, with Trump being unpredictable with his next moves. But yeah, the path to the least resistance, and with investor confidence still very much relying with Trump, there is a likely possibility that we may end up seeing another high for these particular stock indices in the United States.
Yeah, it's really quite interesting that with this kind of deterioration in relations between the US and China, that's seeming like the only thing that could offer potential upside is an actual meeting between the presidents. And as we're talking about tensions, the US is just out there looking for enemies. The EU as well, saying that he will be doubling the steel tariffs in the EU from 25% to 50%. Just talk to me about what is happening then. Also, there are also things happening with the US merger of US Steel and Japan's Nippon Steel. What's going on there in that kind of setting?
Yes. So I think, look, the US remains the net importer of steel, right? So, and the demand is absolutely devastating right now, if you look at the equation from the perspective of these particular tariffs, which were introduced before, which are introduced now. Because if you are an entrepreneur and you are in the business, you're looking at, okay, you don't know where the prices are and what prices you are going to be locking in for your suppliers and for your customers. And from the customer's perspective, your cost has just gone literally 50% up. And steel is a very important material, whether you are coming to construction industry, whether you are referring to any other industry in the United States. So with that much of an uncertainty from the United States side, from the consumer side, represents a massive headwind for the economy and for the stock market. But again, from the perspective of, as you mentioned, if the US is picking up wars with rest of the countries, yes, the other countries are going to take advantage of that particular situation. So Europe, UK, they are looking at these particular situation from the outside, and they're thinking, maybe this could be an opportunity for us to now reignite growth in our part of the world with these particular extra supply, which is not likely going to be consumed because the consumer over in the United States is simply not going to have that much of a power to buy anything at a 50% higher. So we are going to see a shift of that supply from Canada to Mexico, from Canada and Mexico to Europe, to the UK and rest of the world, which could potentially bring some big, huge new players in the market.
Naeem, I think we have about less than 2 minutes just as we wrap up the conversation. What else are you looking forward to this week in the economic calendar?
But look, we got the FOMC, the Federal Reserve speaking later on today.
Yeah.
And then on top of that, we also got the US non-farm payroll data. I think these two particular events are very, very important, not to mention the unfolding of earnings, which are bringing a lot of ripple waves for the stock market and for investors. So these three particular catalysts are very important for investors to keep an eye on.
And indeed, we will be sifting through those as we move on throughout the week. Thank you so much for your time, Naeem. That was Zaye Capital Markets' Chief Investment Officer, Naeem Aslam, with the economic week ahead.